Along with long-term capital growth potential, UK listed companies have a record of providing strong, growing dividends. Investing in an income-focused UK equity fund can therefore be an attractive option if you're an income-seeking investor. The objective of the Cazenove UK Equity Income Fund is to deliver a premium yield of 110% of the yield on the FTSE All-Share Index. There is no guarantee this will be achieved. We also seek to achieve capital returns ahead of the fund's performance benchmark, the FTSE All-Share. We believe that UK equities can provide not only an attractive yield, especially in the current environment relative to other potential investment like bonds, but they also have the potential to benefit from a growing dividend. Please note the value of your investment and the income from it could go down as well as up, and you may not get back the amount originally invested. We have a pragmatic, active investment approach that recognises that the companies that we invest in don't operate in isolation to the wider economy. They operate in the real world. The process is about understanding where we are in the business cycle and forming a view on the impact this is likely to have on the profits of different businesses. We position the fund to reflect our view of where we are in the business cycle, whether recovery, expansion, slowdown, or recession. For example, in the recovery part of the cycle, we are likely to be overweight cyclical stocks, which will offer strong growth potential as the economy expands. In contrast, in the slowdown phase, we are likely to be overweight defensive stocks, which tend to deliver more steady profits across the cycle. It's about trying to be in the right place at the right time and anticipating the changes in the business cycle. When you're investing for income, we recognise that that's not the whole story. It won't suffice to simply rely on stocks offering high dividends to deliver performance. Capital growth is also important. We therefore pay a great deal of attention to the potential share price growth of the companies we invest in. We look for businesses which are benefiting from the current phase of the business cycle and which in addition are attractively valued. As we're looking to grow the dividend of the fund over time, we also look for companies which have the potential to grow their dividends. Our approach to income is pragmatic, focusing on the three elements of high yields, capital returns, and dividend growth. The balance of each of these will change across the cycle. More defensive high-yielding stocks will feature in times of slowdown and recession, moving into stocks with higher capital growth potential as things start to recover, and finally those with dividend growth potential later in the cycle, which is where we feel we are now. Focusing purely on stocks with high current yields can mean missing out on some great opportunities. The process driving the fund has been consistently applied by myself, Matt Hudson, through the ups and downs of the business cycle since the launch of the fund in May 2005. So in summary, the Cazenove UK Equity Income Fund provides the prospect of a premium income relative to the UK equity market, along with the potential for long-term capital growth. Please note that past performance is not a reliable guide to future performance, and the value of investments and the income they provide can go down as well as up, and investors may not get back the amount originally invested.